everyone, thanks for turning up today. We were getting so many different questions on tax that I wasn't able to answer. So I asked Charlotte to come along, which she kindly did. So thank you, Charlotte, for coming along.
No problem. Thank you for having me. I hope this will be useful to everyone on.
I'm sure. Well, I've got lots of questions. So do you mind if I just dive in?
Of course.
So I'll start with, we've got lots about personal tax, but then I wanted to start by talking about making tax digital. So MTD,
okay.
if people are seeing it.
Yeah.
So what exactly is making tax digital, and what does it mean, and who needs to be worried about it?
Okay, so making tax digital came into play in April 2026, so it's now in play. And essentially, it's HMRC's way of making everything digital. So you're doing everything online. There's no more doing your tax returns in paper form. You have to do it online. And essentially, what you used to do is there used to be a platform that used to be able to use the government website to submit your tax return. They've removed that, replaced it with making tax digital, and they are saying it will make everybody's lives easier by doing so. I think that their noses are all growing, because I just think the number of panic calls I have is just ridiculous. But it's essentially you have to keep digital records. That's essentially what it comes down to. And the way that it works is, instead of just filing your year-end tax return, you have to file quarterly reports. Okay, so they're not returns. Every quarter, you need to file a report which basically states your income and expenses. You don't pay any tax, nothing's due, but it's basically to keep a record of what's going on through the year. HMRC says it's to stop people from making mistakes. I think that they're doing it to get a bit more control of everybody and to have more exposure and to see what's going on. But that's essentially what you have to do. And then you'll have a year-end tax return at the end, like normal, which should be easier because you've been doing it periodically throughout the year. So that's essentially what making tax digital is. And you said,
and who will do this? Everybody?
Right. So no, not everybody. So this is for people who are self-employed or landlords who earn over £50,000, and that is £50,000 of gross income, so before expenses. So if I take an example, if you are employed and you earn £50,000 through your employment, and you also have a side hustle of 10,000, and you make about £10,000 a year, even though that takes you over £50,000, it's only £10,000 that is self-employed. So you will not have to do this. You will not have to do this. You'll just do your normal tax return at the year end. But then from next year, so from April 2027, the threshold is dropping from 50,000 to 30,000. And then April 2028, it's dropping further to 20,000. Sorry, it's dropping to 30,000. I don't know what I said. And then the following year, it's dropping to 20,000. They haven't announced what's going to happen after that. I assume that everybody then will have to do making tax digital, but they haven't announced that yet. I'm just guessing.
Yeah. So we can all get prepared for it if we've got rental or extra self-employed.
Yeah.
Okay. So the reason I really wanted to get you on the call is so many people were asking about whether they have to do a tax return or not each year. So in its most basic form, what are the sort of triggers for having to do a self-assessment? Is it just a blanket, you earn more than 100,000, you must do it, for example?
No, absolutely not. So the way that it works is that if you're employed, you're paid through the PAYE system, pay as you earn. So you will have, I'm really sorry, I'm just going to turn my phone on Do Not Disturb so I don't get these messages coming through. There we go. You are paid on by pay as you earn. So your tax, as I'm sure you're aware and you'll see in your pay slips every month, the tax is deducted before you even get the money. Okay, so if you are solely employed and have no other income, there's a bit of a caveat to that about child benefit, but I'll get into that in a second. You don't need to file a tax return. You need to file a tax return if you earn money outside employment, like typical employment. So if you're self-employed, if you have property income, dividends, selling stocks and shares, those sorts of things, there are allowances in place. I don't want to say too much stuff to make it too confusing, but essentially, if you're self-employed, you have a £1,000 trading allowance. So if your income, it's not your profit, if your income exceeds £1,000, you have to file a self-assessment tax return. Same with property. There's another property allowance of £1,000. If your property income is over £1,000, you have to file a self-assessment tax return. So I would basically say you have to think about it if you earn anything outside your normal employment. That's what I would say.
And I was reading a scary stat the other day, which said 3.5 million people overpaid tax.
Yeah.
In the 23-24 tax year. I couldn't find a more recent one than that. But could that be from being on the wrong tax code or something like that at work? And what would we know to look out for to think, well, I'll do a tax return because it'll work in my favour?
Okay, well, first of all, I wouldn't think about doing a tax return because your tax code's wrong and getting a refund. It's very difficult because it all depends on the specific situation that you're in, that person would be in. But you should always look at your tax codes because it comes down to you, not your employer, not HMRC. They fully put the burden on you. The standard the standard tax code is 1257L. So that basically means you're entitled to the full £12,570 personal allowance, which is essentially money that you can earn completely tax-free. So that's also another thing to note. When you do your tax returns, you might not actually have to pay any tax. So, for example, if I'm not employed, I don't know, for example, I've got a child and I've just decided on my maternity leave, let's just forget about the maternity payments for now. But let's say I started a side hustle and I earned £10,000 in the year. I have to file a self-assessment tax return because I've exceeded £1,000, but I'm below the personal allowance. So even though I'll be submitting the tax return, it doesn't mean that I'm going to be paying tax when I don't have to. It's all an information game, and they want to know exactly what you're earning, essentially.
And one thing I see often with clients, when we take them on at the beginning, obviously we wouldn't let clients get away with this, but often they're not getting the full tax relief through their pension payments at work. So it's not salary sacrifice. They're just getting basic rate tax relief at work. But they're a high rate taxpayer or above, and they have to do a tax return. Are you able to explain how that works and also how far you can go back if you haven't done it?
Yes, absolutely. So you can. Okay, so the way that pensions work, and actually you're right, I should have said this before, it is something that people just do not know about. They hear the word pension, they panic, they think they don't understand it, and so they don't look into it. So if you're a high rate taxpayer, that means you earn over £50,270. So anything over that, so if you earn £60,000, no, let's take a higher number. If you earn £100,000 and put £20,000 into your pension, you will get 40% relief on that pension, 20% automatically through your employer, and the extra 20% you have to get through your tax return. So that is another, you're right, absolutely right. That's another reason why you should be aware of self-assessments. It's not just about paying tax, it's about getting the refunds. In terms of pension contribution relief, I'm 99.9% sure you can reclaim it for 4 years back, but I would just have to confirm that unless something has changed.
It used to be 7, I know that, and then it changed to 4.
It's still 4, fine. It's still 4. But yeah, so if you've missed it, you can absolutely go back. I would say even if you've missed it further back, I always say write to HMRC because you never know. If you don't ask, you won't get, and they might give you the additional relief for prior than 4 years. But Yeah, that's really good. That's a really important one to know. There are so many reasons why filing a self-assessment tax return is beneficial. So yeah, I mean, obviously I'll give my contact details at the end, but if there are any specifics that there might be benefits as to why you might want to do it, even if you don't necessarily have to.
And on that pension section where we were just talking, there's a whole video on our YouTube that's about relief at source or net pay method, which is the different types that you can see there if you need a bit more explanation. Okay, so let's say, Charlotte, I think I need to do a tax return. It's going to be my first time.
Yeah.
What are the key dates that I need to know, and what are the fines if I get it wrong?
Okay, so just going over the basics, the tax year runs from the 6th of April to the following 5th of April, the following year. So we're currently sitting in the 26-27 year, which runs from the 6th of April 2026 to the 5th of April 2027. If we go back a year, so let's say we're talking about the 25-26 year. So that's from the 6th of April 2025 to the 5th of April 2026. The income that you've made in that tax year, you will need to pay the tax by the following 31st of January 2027. So that is 9 months later. So, and that is to file your tax return and to pay your the tax. It is all due on the 31st of January the following year. There's also, if you've never registered for that before, for self-assessment before, you need to do so by the 5th of October before that January the 31st. And then you might think when you're doing a tax return, I don't know whether you've not aware, if you're not aware of payments on accounts, but essentially, if you have to pay tax of more than £1,000, what they do, and it's sneaky, and again, they say that it's for your benefit, but it is not for your benefit at all. They're worried that they're not going to get the money. They make you pay the tax that they assume you are going to have to pay the following year. So they make you pay half of that tax, essentially, again, by the 31st of July. Because they're saying, okay, let's assume that you earn that amount again next year. So we're going to take half of that money in July, because they're nervous that they won't get it, basically. And it can be really annoying because obviously it can create a cash flow problem. They are always happy. They have got methods of payment, of delaying things. So if you're ever worried about that, just get in touch with HMRC, because they do they do have payment plans. But those are the key dates.
Thank you. What about if I get it wrong? How much am I getting fined for? Am I going to jail?
You're not going to jail. You're not going to jail. If you get it wrong, basically, if you file late, or if you pay the tax late, you get an automatic £100 fine. Now that is also if you actually don't have any tax to pay. So let's say you've earned over £1,000 in a side hustle. Let's take my £10,000 side hustle example. I have to submit a tax return because I'm over the £1,000 trading allowance, but I'm still under the personal allowance, so I won't have any tax to pay. But I still have to let HMRC know. And if I don't let HMRC know, even though I've got no tax to pay, I will have to pay the £100 automatic fine. And then after that, you pay interest. I can't remember the exact amounts because it's constantly changing, but you pay a certain amount of interest for like the first 90 days, and then I think it's like a daily interest amount after that. So yes, and if you get it wrong, you can always amend it. You're not penalized for making an amendment.
Fine. We just have a client, John, who's asked a question. He says, I submitted a PP1 form to HMRC online to get my tax refund for the proportion of high rate tax relief. Do I still need to submit a tax return?
A P11, is that just for pension?
PP1, he says.
Oh, a PP1. I would have to look into whether you would have to do both. I always say, when in doubt, do it. You lose nothing from it. As well as if you've got all the information there, it's worth doing that. But I can get back to you on that if you have to do that as well.
Thank you, Charlotte. Okay. Do many people do paper returns these days? Because I know there's
not nowadays. No, not really. But it's more the older generation that aren't as tech savvy, really.
And if you were to give a listener sort of one action from this episode, what do you think it should be?
I always say, don't fear it, be prepared. So the more preparation you do, don't leave it until December to start getting your documents together. The year end finishes in April, so why not start it in May? You don't have to pay, you don't have to submit it, you don't have to pay it, but you should get all of your documents together so that you're not in a panic. And also, I always do say, talk to people, talk to people and look online. Like, I do loads of free videos, like it's just all on my Instagram page, and little things like that. You're in charge of your own knowledge. So try and find ways that you might be able to save on your taxes. You don't necessarily have to pay for advice. It might be more cost efficient, but you don't have to do that. There's so much knowledge out there that you can find kind of allowances you might not have known you're entitled to. I do find that a lot of the online softwares kind of automatically do this stuff now, which is really good. So yeah, but knowledge is power, and don't fear it. Don't fear it.
I think the reason why I wanted to do this session at this time of year is this is usually the time of year when the investment platforms are giving you your statements, the pension providers are giving you your statements. You've obviously got your stuff from work as well if you're employed. So I think it's a great time now to really feel quite smug and get your tax return in as soon as possible. Because if you are in for a bit of a bill and there is a bit of a surprise, at least you've got 6 months to prepare for it.
Absolutely.
Rather than ruining your Christmas doing it. I did read the busiest day to do your tax return is Boxing Day.
Really?
Secondly to the day before, yes. Boxing Day.
You would think that people wouldn't be thinking about it on Boxing Day.
Exactly.
That's crazy. But that's another really good point, and that's just something that I mention all the time, is when you make a sale or whatever you're doing, always put about 30% of that money away. Don't think it's money to be spent, and it's not even money to be reinvested in the business. You have to keep it because you have to be able to pay that tax bill at the end of the year. And there's no point being panicked about it. So always good to just have a separate tax pot that you put money into.
We've got another really good question. Thanking you for the webinar firstly, but if someone sold a property, they will pay CGT in that tax year in a self-assessment. Yes. What if they are unemployed, so no income otherwise? Do they have to do anything next tax year onwards once the CGT is paid?
Right. One thing about CGT on a property is it's actually a bit different. So you do have to include it in your self-assessment tax return, but you actually have to submit, I can't remember what the form is called, but type it online, capital gains tax on selling a property. You have to fill out the form and pay the capital gains on the property within 60 days of completion. So, and then you also submit it on a self-assessment. So sorry, your question is, if you do that in the first year, do you have to do it in the second year? So what I would suggest you do is do it in the first year, and then you write to HMRC explaining why you don't need to do it again. And then they'll deregister you. But it's important to make it different.
Just in case people freak out, because I think sometimes you can, that's obviously not on your home. It's not on the sale of your home.
No. Sorry. That's not on the sale of your primary residence. That's if you have an investment property.
Okay. Let me just see if we've got any other quick questions. What can you talk us through child benefit and tax returns? I think a lot of people get caught in that trap.
Yes. So with child benefit, so you apply as a couple for child benefits. If you're married, you apply as a couple. It can't just be one of you that applies. Well, sorry, I've explained that wrong. It is one of you that applies, but it's on your household income, okay? So if the person that earns the most in the couple exceeds £60,000 in a year, your child benefit decreases. It's by I think it's by £200 for every £1,000 earned over. But essentially, by £80,000, that child benefit is gone. So that is another reason why you need to submit a tax return to basically, it's a way of paying it back. I do suggest that if you are over, if you start to earn over £80,000, if you don't need to do a tax return anyway, I suggest opting out of the child benefit payments, just from an admin point. What is the point of having that money come in? Then you have to do a self-assessment to take it. You know, it just makes no sense. So that's what I would suggest to do. But that's how it's called, the high income charge for child benefit.
And just a bit of a financial planning tip as well on that. So the ideal would be that someone would sacrifice their pension, their earnings into their pension to get them below. Yeah. But a lot of people, when you've got kids, can't be affording to sacrifice their money because they need it for their family. But what we do when we're doing a lot of intergenerational planning is, say, grandparents who've got excess money can pay into their child's pension. That will reduce, that will allow them then to retain the child benefit, and then that child benefit can go into a junior ISA for the grandchild. So one payment from the grandparent can benefit 2 generations, as well as themselves as well, for inheritance tax planning. We've gone slightly over. You're very popular, Charlotte. So I'll answer these next questions, ask you these next questions, and then we'll have to call it there, I'm afraid, Charlotte. So this one is, so this guy said, I don't know if it's a man, this person says, this is a timely webinar. HMRC are rinsing me this year as I moved to digital pay slips and haven't been checking them. Yes. I was on 898L for 6 months, I think, due to HMRC wildly overestimating my savings interest. I called HMRC to have it adjusted, and I've already had some hefty PAY tax on my sole income. Yeah. Is there anything, is it just bad luck, or is there anything?
That's just bad luck, and it's just timing.
Yeah.
It's just, but hang on, did they say, so they said that they, so I'm just reading it now. I haven't, he was on, due to wildly overestimating, I've called it to have it adjusted, but I've already had some hefty PAYE tax. Okay, so it's they're so slow. I do, and I know this seems like ancient times, but I always recommend writing to them. I always find that they are quicker to respond and quicker to action things if you write to them. So hopefully you'll be getting a nice refund that will feel like, you know, free money when it all gets adjusted. But yeah, I always, it's so annoying. It is so annoying when they do that. But at least you're aware of it now, and you can act on it.
And Charlotte, that leads nicely into the next question from Julia, who says, when you say write to HMRC, do you mean actually a letter? And if so, who do you post it to? Where do you send it?
I'll have to find the address of who I've always sent to. I've always sent to, it might be the self-assessment address that they have online, but they've always come back to me. So I can actually send this to you later, Lisa, the address that I send to, and it does always work. You've got to have all your information, your UTR, your address, everything, and then you write to them and they should get back to you.
And does that take a long time?
It does take a long time, but I always know I'm going to get a response, if that makes sense. I feel like maybe it might take sometimes it takes a few weeks. It's actually not that long.
Amazing.
Yeah.
I'll put in the chat the one I managed to find on the website, but if it's we will put your one in our letter, in our follow-up email.
Okay.
Thank you. And then 2 more questions someone sneaked in.
Yeah.
Oh no, that one was just, can you email at all, or is a physical letter the best?
I think physical letter. I've never had a good response from an email. So, and you can be on the phone for like hours. So I would just say, right, yeah. Okay.
Sarah has asked, I have just rented out my primary residence. How many years do I have / can I rent it out before having to pay CGT, if any?
Okay, so that is more of a complicated one. I can go through the specifics with you after, but the general rule is you have a 9-month grace period of leaving your property and having no implications on like the primary residence relief. So that's a good thing to know. You can also move out for 3 years as long as you come back. So I would need to know more about the specifics to know kind of the actual implications, but you definitely have you definitely have 9 months of a grace period. I don't know if you're planning of going abroad, that's why you're renting it out. I assume that would be the case because it's definitely not efficient to rent out your primary residence, get somewhere else. So yeah, I would need to know more, but everybody has a 9-month grace period.
And there'd be 2 taxes in play, wouldn't there? There'd be the income tax on the on the rent, and then CGT if later down she sold. Yeah. And is it still proportionate? So if I rented out my house for half the time I'd owned it and lived in it for half the time, is the CGT when I sold it many years later still apportioned like that?
So it's not necessarily like that, because you also, for example, have the 9-month grace period. Oh, yes. So it is prorated, but it is based on a lot of things. It's not just like, okay, I lived in it for half the time. They'll take into account an additional 9 months. There are other ways that maybe you can get a bit more of the relief. So it's not just kind of set in the middle if you rent it for half the time.
Perfect. Okay, well, Charlotte, thank you. Who knew tax could be so wonderful? Lots of questions coming in. But we'll send Charlotte's details round afterwards and all the bits and bobs that we promised. So thank you for everyone for turning up. The next session that we're going to be doing is all about inheritance tax. So do look out for that. It's going to be a longer session as well, with 𝗨𝗵𝗿𝗶𝗍𝗍 coming back. So thank you again, Charlotte. It's lovely to see you.
Thanks for having me.
See you.
Bye.